Hey, listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available? Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today is July 15th, 2025, and today on our call we have the CEO, Daryl Lockyer from Rumbu Holdings. Rumbu trades on the Toronto Stock Venture Exchange under the symbol RMB. The company is currently trading at 80 cents with about 13 million shares outstanding, or about a $10.5 million market cap. I'd now like to hand it over to Paul Andrew.
Hey, Trevor, thanks a lot. Daryl, Rumbu Holdings, a name that keeps coming up amongst our members. Lots of questions being asked. So we thought it would be a good time to bring you on board to tell everybody what Rumbu's all about. I know we've had discussions in the past, but great to have you here and great to give you an opportunity to tell us all about the business and ideally, some of the latest updates. So why don't you tell us what Rumbu's all about?
Perfect. Well, a little bit of my history. I started in funeral service, which Rumbu is a funeral service company in Western Canada and looking to grow. I started in funeral service right out of high school, graduated high school in 1992. I'm going to do a quick version. Licensed funeral director and embalmer in 1994. Did a little moving around in a couple of companies to get experience. In 2001, became a general manager of about a 500 call funeral home. In 2008, worked with a new company to build 17 locations. Since then what ended up happening is I turned 50, and it was a decision that, we kind of wanted to, my wife and I decided we really wanted to kind of partner with young funeral directors or people that we had worked with. And we didn't have all the money in the world. So we decided to take this model. So what we do is we legitimately go into middle market funeral homes, smaller communities. We partner with individuals in that funeral home, or we have our own that would like to relocate to those facilities. So we're in our industry, we have a lot of people that are trying to get out. The boomers are retiring. And so there's a wonderful opportunity for growth in this market. The biggest difficulty is you can't find staffing and people. So as an example, we have a location where my wife had apprenticed her in 2001. That's an example of one of our locations that we partnered with somebody locally in the community, and it's done extremely well. So we've done this. I've done it now for over 30 years. I've done it a couple of different times. I've done funeral home brokering and marketing from a standpoint of assisting other people in purchasing the businesses. So what we do is we take small town communities and middle markets, and we get to use our bulk buying power based on relationships. We have relationships in the industry to assist us in facilitating locations that don't have staff and to bring in some great people that we trust, we know, and we legitimately trained.
Fantastic. So it's I hate to say roll-up story. You're acquiring businesses that are out there. Maybe give us a sense of size of opportunity. Like how many of these sort of facilities would you expect are in the market that you're going after?
Well, it's amazing to see. One, there's different funeral home magazines that have different ads. There's several new brokerages that are coming out, randomly phoning funeral homes. So if you would have asked me 3, 4 years ago, you always seem to have a target market of about four or five, two or three of them dipping their toes. One or two of them really serious and ready to go.
Mhm.
So what we found now is so many people that are phoning trying to get into the funeral service end of brokering has opened us to all kinds of opportunities. So our growth window now is, we generally have between 10 and 20 different funeral home possibilities. And that's in Canada. So we try to focus in clusters and markets that we can have synergies, and we know that we can grow in the area, and we know people that are in the area to give us security in our investment and know what we're getting into.
Mhm. And Daryl, what is sort of the economics around some of these businesses? Maybe, how fast do they grow? What are the sort of purchase terms around these sort of things? What can you tell us about that?
You're really looking in between a market of $1 to $3 million. The difficulty when you're a company our size, when you jump into a Calgary, a Toronto, a Vancouver market, the real estate costs more than our
Mhm.
company. So what we do is we kind of target market that $1 to $3 million. We're comfortable up to 5 or 6. And what it does is it gives us a good basis of generally, if we look at a funeral home and the property, you can buy it for 1 to 1.5 million. Property's worth about 750. Cash flow's worth about 500. You work with the owners, maybe a vendor take back over time of a 5-year plan so that we can get the most out for the owner, as well as then that owner or ownership will also assist us in our transition. And it's been a very decent partnership and blending, and we found the relationships to be going very well.
Mhm. And so let's talk a bit more about that. So when you structure a deal, do you, I mean, are you issuing cash, are you issuing shares? You mentioned vendor take back. Maybe what's the perfect scenario for you when you see one of these transactions?
Our perfect scenario is to get our real estate portion and then basically working with our bank, getting us to the cash flow point. And then honestly, part of the vendor take back is to make sure that we can have a situation where the owner continues to support and just doesn't walk away. It also allows us we presently don't issue shares. We do have a partnership program going in place because the Rumbu philosophy is for us to partner with the funeral home manager in each location so that it's there and they only own in that location. So it's important for them to make sure that they're fiscally responsible, they're doing all the right things. They're not just looking at Rumbu's grand totals and saying, hey, we're doing okay, but my location is underperforming. So we have depending on the value in the real estate and the business, we have a formula that works and it's consistent. And the nice thing is we've acquired, 5 funeral homes in the first year or so. So we do have a very consistent model that people can trust. So it's not me coming out of the blue and saying, we're going to give you $1 million for your $3 million funeral home. You can trust that we know how to evaluate. We've worked with all the large brokerages, seeing how their formulas work. And we have our model that we feel is a successful one.
Now, earlier you touched on synergies, buying power, things like that. Maybe give us a sense of scope. Like how much of an impact is that, and how much of a competitive advantage over some, let's say, some small competitors and maybe in some of your marketplaces?
Well, it's extremely difficult for smaller markets to negotiate great rates because there's a big difference if you're selling 1,500 caskets versus 30 caskets a year.
Mhm.
All of those, and that doesn't matter if whatever commodity it is. So because we partner in and know people, then we can turn around, and so we can go into a smaller market and actually save the community members money, yet still making a better dollar by utilizing that. So our ability to say, if you have a small funeral home and you're trying to do like a memorial service package with PowerPoints and specialized cards and all these things, it's really hard for a mom and pop shop to put all this time in because as we know in rural communities, you can have 5 people pass away in a week and then you might not have anyone pass away for 2 weeks. So all that work is jammed into that window. So with our ability and our people and our experience, we have offsite people that can help them assist and give those families just a better quality of everything in the service that maybe isn't as modernized in rural areas or middle markets.
Mhm. You've been a public company now for not very long, I think just over a year. Maybe why go public? Like why this platform to do what you're doing?
Well, I think our board and our team, we believe that in order for us to grow at the rate that we believe we can, individually is very difficult. The B20 change in real estate laws with the Canadian government, and we look at all these different scenarios, this looked like a way that if people actually believe in funeral service and knowing that, maybe we're not the biggest bottom line company at the beginning or down the road, but we understand that managing these funeral homes, you can make a decent return without, raping and pillaging grieving families. So in order to grow as quick as we'd like, this becomes a better model, and then people can become a part of it to assist the continuation of proper funeral service in our industry in areas that
Mhm.
would lose it.
Mhm. Let's talk about the public entity. I think 13 million shares outstanding is what I remember seeing. Maybe insider ownership, or maybe talk about any other significant investors that you know are part of the team.
Well, one of the interesting things with Rumbu is my wife and I do have a lot of shares in it, partially because what we did is we rolled into the funeral homes that we independently owned. And by
Mhm.
doing this, we wanted to prove to our new upstart company that we're all in and we're invested in it. We took it the locations at a reduced rate to get some more equity into our company because
Mhm.
we believe in this in long term. We want people to support our company, and we want to grow because there's a window of opportunity where we have young people that are more difficult in the workplace. They're more focused on time off, balance of life, which is important. But if we can get them personally engaged and understanding the model, they can have all of that, plus live in communities that are quite fruitful, and it'll really assist in their career, retirement, financial planning. And we have the power to do it with that public option than just
Mhm.
going the bank route, which the other company I worked with for years, we went the bank route all the time, and it was not always as easy as it should be.
Sometimes public shareholders are a lot more forgiving than the bank clerk for sure. So as far as insider ownership, percentage wise, what's the makeup of the shareholder base? You and your wife, as you said, are significant shareholders,
Yeah,
but yeah,
our
go.
board and all the insiders are 61.9%. I believe that's what it says in our document. If I'm wrong, I apologize, but I'm
Mhm.
99% sure.
Yeah, yeah, that sounds about right. And then the makeup of the other sort of 40%, is it individual retail investors, or is there anybody else of note that we should know about?
It's really people I don't know, to be honest, right? They
Yeah.
came out. I know we had to do the initial where you needed at least 180
Hmm.
shareholders to become public.
Sure.
So I don't know a lot of them.
Hmm.
So it's a lot, 40% outside.
Gotcha. Gotcha. Perfect. And then, in running a business, I have no idea what the challenges are of the business. What would you say is your greatest challenge in running a business like this?
Well, the greatest challenge is, it's people. The people make the business.
Hmm.
One of the big things that everyone likes to ask me, especially when it was bank financed, is how do you think you can run a funeral home in Smithers, British Columbia, and you live in Southern Alberta, or
Hmm.
you live, hours away? Well, it's again building relationships with people. The people that are there, I've worked with since 2008. The other lady apprenticed, went through the management training. So we have two solid people that I've known for a lot of years. So each step of the way, we fundamentally make sure that we have someone on the ground that we've worked with before, trust. And then if we're into newer ventures where we may not know the individual as well, then we have accounting systems in place that modernized software. We have all the technology to make sure that we're covered.
Financially, sort of where do you stand right now? How much cash do you have? Do you see a need for further financings down the road? Maybe give us a sense of your sort of capital requirements.
Our capital requirements, what we found out is we've done the first tranche of purchases, so to speak. It's worked well. Our debt is very minimal. We'll be looking in the near future for looking to raise some funds, whether it be through a private placement or hopefully if we can announce. We believe if we announce a few more acquisitions coming down the pipe, that will assist us in people's interest. And as the shares go up, it, like you said, it's a lot easier model to try and get some of that funding in place.
At this point, I want to remind everybody that's listening, if you've got some questions you'd like me to ask Daryl, please use the chat function, and I'll make sure the question gets asked. I see some are already starting to come in right now. Perfect. The Again, I'll go back to the M&A side of the business. What what's your pace, or what do you think is a healthy pace of acquisition for a business of your size? Is this something, I think you said you've got 5 acquisitions kind of under the belt, one way or another. What can investors expect in terms of pace of new acquisitions?
The acquisition should be continuing roughly on that basis. We should be about 4 to 6 a year. Sometimes they get delayed a little bit, so you get the 6 into 1 year and a 4 into
Mhm.
another year. But the plan is to continue it sort of the pace that we've done. We understand how we've implemented all of our systems. We've fixed some of the little issues of moving into new companies, and everybody seems to have a different accounting software, so
Mhm.
the setup of all those things. So we went through a little bit of a difficult situations of getting that set up, but now we all have the experience again with exactly how we want to do it. The whole move-in system's easier. So
Mhm.
that's going to allow us to free up where we were slowing down acquisitions and delaying people because there was a lot. And we
Mhm.
wanted to make sure that we were hitting home runs, not just hitting base hits. So now
Mhm.
we have better systems in place with the whole public company, with
Mhm.
everything that's happening, getting used to the audited statements for me.
Mhm.
And now knowing what's coming down the pipe, it makes it a whole lot easier to increase our acquisitions each year.
Mhm. And can you give us a sense of what do these businesses look like when you buy them? Like what kind of margins do you get? What kind of maybe bottom line do you get? And then that's before, acquisition from Rumbu. And what does it kind of look like afterwards if there's any significant change?
We pretty much double the margins from the investment. We do have to understand, and part of looking at our financial year of 2023 and 2024 is at the beginning of an acquisition, you don't just walk in and
Hmm.
and trip a switch. You want to train, you want to change product, you want to utilize product that is better cost effective for us, but you don't want to just get rid of those products. So
Hmm.
there's that little building time that we realize. And so to see that growth, it happens in that first 6 months to a year. It's not so much in the instant. And if you look historically at some of our numbers, that's what kind of caused us the slow delay in it. And then there was a bunch of locations. If you look at like 2024, we only had one funeral in for a month, one funeral home in for 4 months, one funeral home in for 6 months, but we're supposed to have this value. So the the model of profitability, just us having our bulk buying, just us having our assisting people, it's even us having our accounting where we look after it internally and work with an internal person. We save those wages, salaries, and it's fairly significant to the profitability just by changing the internal stuff, not so much like everyone says, go and raise prices. Well, that was hard,
Hmm.
right? But this is legit ways that we can control it because some of these markets, it's not like we can advertise like crazy. If you're the only funeral home within 250 kilometers, your volume's not exactly changing drastically. It's
Hmm.
better utilization of the possible revenues that are there.
Hmm. What's the biggest sort of synergy or I guess cost advantage when you go in? Is it like the accounting department? Is it product procurement? When you get in, where's the biggest lift that you give?
The biggest lift for us is a lot of funeral homes. The accounting's huge.
Hmm.
Management owners sometimes are pretty much semi-retired, taking lots, putting stuff through. And
Hmm.
so when you purchase the business, all of those things are in it, and you can't take that away because that's in the financials. So we see a lot of savings that way. We also, what happens in middle markets and smaller markets is trying to get coverage for people's time off, holidays, the balance of life. Well, we have people that are licensed in each province so that our coverage is internally. So you're not paying, five or $10,000, 5,000 a week, say $15,000 a trip to get coverage. We just send, I'm licensed in British Columbia, Saskatchewan, Alberta, and Manitoba. Hopefully that's not the right order. I'm not really
Hmm.
Canadian. Um, but so we're all in an ability that if we have an issue, we can step in.
Hmm. Gotcha. Gotcha. And then when you make an acquisition like this, typically like what's the payback if or I guess what's the multiple you typically buy these at? Is it like 3 times EBITDA, 5 times EBITDA, 10 times? What's a standard or an average purchase price?
Our average is between 3 and 6 times. Some of the real estate is the adjustment in that factor. If
Sure.
you're saying small town A and the funeral home's worth about $1 million, the real estate's 600, the cash flow's 200. So we're gonna probably purchase that in the like one of these
Mhm.
without doing a lot of numbers. It's gonna be in that 900 to 1.2 range.
Gotcha. Gotcha. Okay, let's take a couple questions here, and then I'll finalize with my questions. Let me see. We've got Sergey here says, "Why Q4 last year suddenly printed a very high loss? What happened in Q4?"
In Q4 was us doing all of our year-end stuff and adjustments, and we had a bunch of the St. Paul location costs of the deal, etc., that came in. And so therefore that was an expensive transaction because of the volume, etc. And so that kind of set us back in adjusting to make sure of our audit.
Yeah, that's pretty standard. Q4 is kind of the kitchen sink. Okay, company net income margin was 10% in Q1. Is this the best margin you can get? Is 10% kind of an expectation, or what can you say?
Our expectation of margin is usually around that 20%. When we're doing well, we should be 20, 23, 27. If we do some acquisitions and we have some delays in setting them up properly, then it's closer to that 10, 15. The reason for that margin was just the initial cost of setting up the location. So we look to see more of realistically industry standard around that 20%.
Okay, fantastic. Okay, and how many more M&A opportunities do you think in 2025 and looking forward? You sort of mentioned 4 to 6 is kind of the pace. I can't remember the news releases, but what does it look like for the balance of the year, I guess? Yeah.
It looks like we should be moving closer to the 4 than the 6, to be honest. And one or two of those might possibly carry into the next year, but they can also happen very quickly. So some of them lag, some of them, you have someone really excited, and
Hmm.
then when the reality comes and they're selling their legacy, it starts to delay. So some of the transactions go really quickly, but if we set our goal to that 4 to 6, I know we usually say 5, but
Hmm.
it's easier to spread it out a bit, then it's definitely achievable.
Hmm. Now, I've got experience. I was an investor in Lowen Group years and years ago, and then watched Service Corp, and obviously very highly successful in doing what you're doing here. But the what was I going to say here? Uh, oh gosh, I've drawn a blank. Anyways, we'll go on to another question, and I'm sure it'll come back. Nolan asked, Q1 showed revenue of 1.7 million, operating cash flow of 446,000. Is this type of cash flow margin sustainable, or alternatively, what is a targeted gross margin when acquisitions are fully integrated?
The uh it is obtainable. One thing is we do have some seasonality to our industry. Some industry people will say that's not true, but I believe summers are definitely slower in our industry, and winter months cause more passings, to be honest.
Hmm.
What we see is we're pretty much looking to do between 400,000 and 500,000 a quarter, and and then that increases as acquisitions come in based on the same percentages.
Hmm. Gotcha. I remember what I was going to ask. Back to the loan group and Service Corp. There was a fair bit competition on the higher end or larger acquisitions. Now you're in typically smaller communities. Do you see much in the way of competition on the buy side? Do you get other bidders on these projects?
We get less and less.
Mm,
It's more now, it's a buyer's market. The large companies, such as SCI, Arbor, even Parklawn,
mm,
SCI, what they did is when they purchased Alderwoods, which was the fallout of Lowen
mhm,
Group, they got in, purchased that, and then they sold off all their little locations.
mm,
And so that's how we learned that model. We learned from Lowen. Lowen, the biggest problem with Lowen, other than you can watch the movie now,
mhm,
but other than what they did is they kept buying locations to race to put that revenue to their bottom line. And so they had to keep buying in order to keep that going, to keep share prices and shareholders. So we're very, very aware of that. I had some low-end shares. I didn't do very well. But it's one of those situations that it's been good lessons for us,
Mhm.
and we have an amazing team that knows we want to make sure that we walk before we run.
Mhm. And what I've always found appealing about this type of business is it's truly one of those industries that have succession issues, right? These are usually facilities in smaller communities that there's not a ready buyer for these. So you tend to get good. It's almost always a buyer's market in certain markets. I guess that's what I'm trying to get at. So you're dealing with that typical. Um, let's say aging out owner that really has very few options in terms of where he can turn around and sell the business. Is that correct?
It's absolutely correct. And the difficulty is, family businesses, they're not, before it was like everybody wanted to stay in the business and you see all
Hmm.
the Google searches, and now kids are going different directions, and
Hmm.
they saw mom and dad working 24/7, and they
Yeah.
don't like that model. So there isn't that succession plan. But there's a bigger calling in funeral service where more people are starting to get into it. So we have that extremely large gap between new people and then the old guard. And so that's what we help to bridge. And by building those relationships with the new people coming into our industry, we have through friends, etc., we have about 12, 14 apprentices always at one time. So we can know that those are the people that are going to move forward to the next location for a terrific opportunity.
Hmm. Fantastic. Okay, a few more questions here. Jeremy says, how should we value a company like Rumbu? What metrics are used to value funeral homes, and how does RMB compare to larger companies in the field?
That's a good question. One of the things is when I look at it, we have an evaluation done based on real estate, based on our cash flow, and we have about, I think it's $4.8 million debt, but our valuation is pretty much 3+ times that. So we know we're fairly undervalued. Now, doing that to shareholders and explaining that is more difficult. This is a little off topic, but something that's really difficult is we run into a world now where we're purchasing in small markets, and it's difficult because if, say, we're in a competitive market and they go, hey, this company called Rumbu, which is this big bad public company, is involved, that can cause us grief. So we try to downplay our company as much as possible. I know that that's not what shareholders want to hear,
Mhm. Mhm.
but the value of our company is going up, but we just have to be so careful because we're not a big bad company. We're a very
Mhm.
small company, as everyone's seen our numbers, and we want to grow and respect that. But we still do have profitability. Our metrics, so I mean, when we're only a third debt, that's pretty good.
Mhm. Mhm. Um, Another question, are you looking to buy funeral homes that are located in areas where the funeral home has no competition? Are there many communities where there's only one service provider in town?
There is more of that, and
Mm.
it's kind of the model that is the future, because say you work at funeral home A and I work at funeral home B, and we're
Mhm.
100 kilometers down the road.
Mhm.
Well, if Rumbu partners with you and Rumbu partners with me and our owners are gone, then what we can do is we'll be way more profitable because every second weekend I cover you. Every
Mhm.
second weekend, this is very basic, I know, you cover me. So that
Mhm.
saves us 60 to $80,000 per location for that second license. So right there, if you
Right.
buy those two, you're putting 150-ish to your bottom line, but you haven't changed prices,
Mhm.
services, anything.
Mhm. Fantastic. Yeah, good to know. Okay, Curtis asks, does the company have enough funds to internally grow the company, or with the latest stock price move, is an equity offering likely?
That's what I was talking with Ross earlier.
Hmm.
We were not going to, and because of the stock prices and the rest, it's looking like we should do that. Um, I'll be honest, I just don't want to have a couple really good opportunities come up and then we're dragged back.
Hmm.
Um, we've trying to adjust, like we had a bank package for all of the acquisitions we've done so far. Um, and we're just adjusting that. So we should know fairly soon what the bank's willing to do because now we're showing a profit. We're doing
Mhm.
certain things that we said we were going to do, and now it's coming to fruition, but it's still a very small picture,
Mhm.
right? It's a very small window.
Yeah, understood. Understood. Sergey asks, what's the biggest risk and biggest opportunity for you right now?
Biggest risk is buying in a community that you don't know very well, and you have an issue, you have a problem, or they were doing something wrong. But in the part of the reason why we would like to grow at a certain rate is each time that we purchase a new funeral home, if you have a problem somewhere, and it's one location, but you have nine others, you can work through that problem. If somebody comes in, we call it a man in a van. They try to do a discount cremation. They don't have a facility. Well, we can fight that battle and still be safe in our other areas. So as we diversify by building or growing our facilities, then that gives us a more secure investment, and that's really what is our big goal to make sure we're doing so that we know we're diversified.
Mhm. Gotcha. Curtis asks, what is the biggest bottleneck in the business?
Biggest bottleneck is we had a little bit, and I think I mentioned it earlier about having all these brokerage companies just randomly phoning funeral homes trying to sign up and represent them.
Mhm.
What that's doing in our world and growth is all of a sudden every Tom, Dick, and Harry says, "Hey, I'm in."
Mhm.
And so all of a sudden, we had a facility a couple of years ago, and a guy offered three times what it was worth. And the owners didn't come back because they ended up selling it for $300,000 less than what we offered them. So when you get ads all over and you get new brokers, then everyone goes in and kicks tires and they get everyone excited, and you get into more of a bidding war. And like we just said, we weren't really having bidding wars, and we don't do
Mhm. Gotcha. Okay, and then the last question from the audience here. It says, Jeremy says, what is the biggest hidden value in Rumbu? What does the market not appreciate or know about your company?
that. Probably the biggest thing is we have the relationships and people that know what they're doing. We've
Mhm.
seen Nobody's seen everything, but we've seen so many different scenarios. We've had to do this in so many different ways, in different levels, from funeral homes, even in the consulting end for funeral homes in Vancouver and Calgary, um, even into the tiny markets. So we have so much experience. We've been there, done that. We have the relationships. If we have a problem, it's a phone call away. Where some of the new companies and individuals, they're focused on their one scenario, where we get to make sure that we have support from everyone.
Mhm. Fantastic. Yeah, it's experienced people that typically is one of the big barriers to entry is knowledge. Fantastic. As investors watching the business right now, what do you think are the key metrics we should pay attention to, or maybe catalysts? I'm assuming, you're obviously do more acquisitions, but is there something else we should keep a close eye on?
It's more just seeing that our numbers will increase in profitability. Um, because of the way it started, it's very small. If you go onto an Arbor site or a Service Corporation International site, our metrics, we have debt, we have this. Arbor runs in a scenario where they don't have debt and their profit margins look a lot different.
Mhm.
So it's that understanding that our profit margins are based in a small company, where an SCI and an Arbor could be running at a margin, say 80, 82%, 88%. But because when they were a public company, there was no debt. So their
Mhm.
margins were incredible. So when we do funeral home margins and metrics and the rest, we have to look at all of the package in it to understand that it's going to take us a little time to slowly adjust. Honestly,
Mhm.
what the shareholders here probably want to hear is, are we going to start moving out of bank debt and using share debt, so
Mhm.
that when's the next phase of that, so that we
Mhm.
truly do have a higher margin?
Mhm. Now, speaking of margins, Sergey says, you said net margins can be as much higher than 10%, even 20%. Does that mean that if you were no longer making acquisitions during the year, we should see net income margins increase to about 20% target.
Absolutely.
Yeah. Okay. Perfect. I love it. Yes or no answers. I love those. Definite. All right. Well, that's kind of it for questions. Daryl, we always like to wrap up by giving you an opportunity to say any key message or sort of key takeaway you want everybody to walk away with today. What would that be?
Well, first off, thank you for you guys for having us on, and thank you to the people that have invested in us. I talked to a bank this morning, and they go, "Ugh, it's a penny stock," and I was like, "Oh, I'm just crushed. I didn't think it was that bad." You can reach out to us anytime. Um, we strongly believe in what we're doing. We have a young enough team that the old guys are in their low 50s. So we have some tread on the tires, and we're not stuck in the old school. We are modernizing with times, which is very important. I've struggled with it, but I have a great team that's forced me along. But I think one thing that everyone has to understand is we have a lot of eggs in this basket, and we want to make it work. And it's not like we're throwing a million shares out there and
Hmm.
making a bunch of money internally. We're saying we want this to be strong. We want it to grow. And we look for this to be a future company, not just sell out to an SCI, an Arbor, or another group after we get a clump together.
Fantastic, fantastic. We've been speaking with Daryl Lockyer, CEO of Rumbu Holdings, symbol RMB on the Venture Exchange. Daryl, it was great to catch up. We definitely want to catch up with you in the future, so hopefully you'll take our call. But thanks so much for our time today.
Awesome. Thank you all.
Awesome. Bye for now.